Now, this index, or rather this ETF, tracks this iEdge index that is calculated by Singapore Exchange. And when we look at what investors are looking for, they're looking for the next growth area. After a stellar returns on US and China, we think that emerging Asia could be one of these options that investors look at. Now, in terms of emerging Asia, we're seeing that this is where most of the world's population is. They have the young working force, and in fact, it has also the highest rate of growth. If we look at real GDP growth, we're looking at maybe above 1 for US and UK. We're looking at 4 to 5% for China, and then we go on to India, which is the second largest emerging markets after China and the world's largest democracy. And it has also returned 8 consecutive positive returns in terms of its stock market returns. Now, India itself, in terms of real GDP growth, is at 6 to 7%. And when we look at the Southeast Asia bloc, that also hovers around 4 to 5%, with Indonesia and Malaysia taking the lead. Now, with all these combinations, we think that a reasonable combination would be to include Indonesia, India, Thailand, and Malaysia in an emerging Asia Select 50 index. So today, this is the index that we have launched, tracking the large caps of this region.
So this tracks this emerging Asia index that really has been around actually since 2018. How has the composition of the index changed actually since it was incepted or launched in 2018? And what is that telling us about the trends that in emerging Asia that the index is trying to track?
Yeah, so the index itself has a sector attribution, with largest sectors being your financial sectors, your energy sectors, and your technology sectors. Really, on the financials, it is at 40% today, and it is a testament to the strength in the financial sector. We do see upside in terms of policy-driven upside, as well as structural tailwinds from credit growth, and we do think that this reflects in the changing portfolio weight in that sector. The other sector that we're looking at is on technology space. The technology in Southeast Asia has grown a lot over the last years. In fact, we had launched a previous index tracking Southeast Asia technology sector, and we do witness the returns profile on such a sector. So in total, if we're looking at the top 5 constituents of the index, we're looking at across the multiple sectors: finance, energy, technology, and we're looking at across the different countries that we've mentioned earlier. Now, this is intended because the index itself is constructed with diversification in mind. There is a 50% maximum weight cap on country, there's a 40% maximum weight cap on sector, and there's a 7% maximum cap on individual stocks.
And when you look at the geographical breakdown, I've noticed that India, it takes a huge chunk of that pie. Has it always been that case, or has the ascent of India as taking a bigger chunk of this emerging Asia index really just emerged over the last couple of years?
Yeah, so when we talk about an emerging market in a portfolio, we do typically think of it in terms of China, India, and the rest of the emerging markets. So these are the big blocks of such a portfolio. Now, when we talk about the iEdge index, emerging Asia index today, this is an ex-China fund, and we do see that there are flows coming into such emerging Asia ex-China funds, precisely because investors have a preference to manage the China bloc as well as separate from the rest of India and Southeast Asia. Now, we do see that India is a huge chunk of this portfolio. In fact, we do have Indonesia and Thailand as well as Malaysia coming up in terms of index weights. Today, they are about 20% each of the portfolio.
Yeah.